So, bore en a croeso, or apologies for my hideous Welsh, but good morning and welcome to the ScaleUp Institute and British Business Bank Finance Education Session for Scale-Ups in Wales. I'm Stuart Rock from the ScaleUp Institute. I'm going to be the compere for today's event. And I hope that you have your coffee, your tea with you for what will be a really informative hour and a half. Over the past 7 years, it's been hugely exciting privilege for me to work with Irene Graham and Josh Robson and the team at the ScaleUp Institute, as they've made it a true voice of influence up and down the country, helping to make the UK the best place in the world to grow a business. Today's event focuses on scale-up growth capital. What are the trends, where and how to find the appropriate capital for your company's growth, and to get a better understanding of the wider ecosystem that you can tap into for support. And we've got a terrific lineup and a wealth of knowledge here for you today. So first, I may just do, if I can, encourage you, if you've got any questions, put them in the chat and we'll get round to them as the discussions go on. First, you're going to hear from my colleague, Josh Robson, who's Head of External Affairs at the ScaleUp Institute. After Josh, we'll hear a presentation from Beth Bannister from the British Business Bank and from Max Adam from Innovate UK. Then there'll be a panel session in which we'll hear from two scale-ups. That's Gabriel Fish from Transcend Packaging and Damon Chappell, who's the co-founder of Sonovate. And then we have a wider panel with Tim Davis from London Stock Exchange, Duncan Gray from Development Bank of Wales, Hannah Waters from the Business Growth Fund, Ben Tickler from Silicon Valley Bank, and Mark Milmo from FinCap. The session will finish at 11:30. We'll make the slides available to you afterwards, so don't worry about taking screenshots and scribbling furiously. Just, kind of let your coffee percolate and let your questions come forward, put them in the chat. But without further ado, my great pleasure is to hand you over to Josh Robson. Josh, the floor is yours.
Good morning, everyone, and thanks for that, Stuart, and really good to be here again, talking to you in Wales. Now, to take you through a few things this morning about scale-ups, and many of you will know this, and many of you being scale-ups will be very familiar with the value that you add to local economies, particularly in Wales. But I think the point that we really want to start off with is, why are scale-ups important? Why are you important? Why does the businesses that you are growing, why do they make such a big difference? And we know from the data, from the analysis that we've done, and the scale-ups are much more productive than their peers. They generate an average of 338,000 per employee in turnover. They're much more innovative than their peers as well, and they're much more international. We know that the majority of scale-ups, half of them, are involved in international trade already, and we know that this is the case, and that they're continuing to grow and continue to look for those international opportunities and looking to do so. We know that they're good corporate citizens, and we know that they create high-quality jobs, and that's so critical to local economies. It's really important to figure out how to nurture and to really enable businesses that are looking for growth and looking for capital to help that growth to find what they need in order to take things to the next level. So scale-ups are the growth champions of the UK. Of the whole SME population, 5.9 million businesses, that kind of mass generates 2.2 trillion in turnover. But we know from the data we've analysed that actually 34,000 businesses, 33,500 businesses generate half of that entire turnover. So 33,000 scale-ups generate 1.1 trillion for the UK. And these businesses, as I said before, are much more productive than others. They're more productive than average. And we can see that in Wales, there are 1,200 Welsh scale-ups with 630 in the pipeline who are kind of on their route towards getting to that scale-up number. And the way that we define a scale-up, and this is just useful to understand how we sort of bracket the statistics in this, but a scale-up is something is a company that's growing at 20% or more in either turnover or employment or both. But we also look at those companies that are on their way up to that level. And that can be really critical for understanding how programs can be better targeted and how local ecosystems can lean in to support businesses as they are on that growth journey. And we know that this combined number, this almost 2,000 businesses in Wales, employ 130,000 people. And I think that that's something which can really, really make a huge difference to local economies, because many of these companies are not based directly directly in cities. They're often based in local communities, and they're based in areas where they have access to both the space and other sort of key facilities to help them to grow. So what are we seeing in terms of clusters? And we map clusters around the whole of the UK, and we can see that in Wales, there is a bit of a focus in terms of scale up. So this is scale ups that are in Wales around wholesale and retail, around manufacturing, and around accommodation and food. And I think that sort of food and drink dynamic, that sort of accommodation dynamic, those are things which it's not necessarily assumed that this is what scale up businesses are and do. But what we found from the data we've analysed is that scale ups are across all sectors of the economy. This is not just tech. This is not just about finding the next platform business, the next app to be developed. These businesses are often family owned. They can be much older than sort of standard sort of 2 or 3 years expected of early stage businesses. Some of these are family owned businesses that have been around for 100 years, and actually they are still going through these growth phases. And that's a really important point to understand when it comes to thinking about the right type of capital that can be available for these firms. So when we look at scale ups in Wales, what are they saying? Well, we can see that actually access to markets, that kind of international point, that exporting point is critical. And we know that this is the UK, it's also international. And understanding how to sort of create the right way to enable companies that are growing rapidly to reach these customers is really an important point to focus on. We also know that access to talent and access to equity finance is pretty critical as well, with access to equity finance often fueling the next stage of scale-up growth. So when we look at the overarching drivers of growth and the way in which drivers are really sort of focusing in on creating clusters in local areas, it's the access to talent, it's access to clusters and hubs, and it's access to finance that can really, when brought together, supercharge that growth and really start things businesses on their growth path. We can see actually when we look at this that the Innovate UK is also pretty critical. An overarching understanding of how to gain R&D and innovation finance can also be quite key. And we can see when we look at Wales in particular that 9 in 10 access sort of external finance, and that's more than the average. That's much more than the average. And we know that 5 in 10 are also planning to use equity finance. So understanding the right routes to do that and understanding the right ways to engage with companies, for those on the call that are in the intermediary space, is really quite an important way of supercharging the business growth within Wales and overall. And we talk about finance in the round, and we mean that kind of continuum of finance, right the way from early stage, whether that's grants or innovation loans, and you'll hear from Innovate UK a little bit later, right the way through to IPO. And I think the thing that's really critical to understand across each of these stages of this escalator of funding is that this is the journey of one business. And I think sometimes people within the finance space can see, and certainly within the policy space, can see the area in which they focus upon as being the only part that really matters. And I think it's important to understand how that area then hands on to the next stage of growth for a business, so that a business can really figure out and have the most knowledge available for the right type of finance for them. So when we look at the overarching educational series we're doing, we look at programs, and we at the ScaleUp Institute really focus in on programs that are providing value to scale-up firms. You can see on the left some leading programs that we've endorsed. We actually have a scale-up support finder on our website, which you can look at, and you can find routes towards programs in particular areas that might be able to help you, and you'll be able to search for. And we've got some focused insights on both the British Business Bank and also Development Bank of Wales and others to really think about that. And one of the things that we've been looking at in much more detail recently is the creative sector, and we're looking at this in relation to broader sectors as well. We have a live tool on how investing in the creative sector can be much more accessible than people perhaps think. And then you can also see that we've done some substantial assessment of the funders that are available in Wales, and you can see that actually the numbers in Wales reaching 10.2 million, and we do an assessment of visible scale-ups in the region, has actually increased over time, and we can see that 307 million have raised investment. And one of the things that's interesting about that is we know that those that have gone through the Innovate UK process are often raising more money when they get to the different stages of equity rounds than those that haven't. And that's partly because of the due diligence process and the way in which IP and other things can be curated effectively as part of those things. So as the Institute, we have a range of recommendations. These are across the whole swathe of issues that scale-ups face, whether that's across talent, markets, finance, infrastructure, or indeed leadership development. And what these are about is really understanding and really sort of getting to grips with the challenges that you as businesses are having within Wales. So do pitch in with questions throughout this session, and do sort of get in touch if you're interested in the work that we do. This is very much about trying to make the ecosystem in Wales and the ecosystem in the UK overall the best and most effective way to sort of help businesses to scale and grow. So, you know, keep segmenting, keep engaging, keep energizing, keep scaling. And I'm going to hand you back to Stuart, who is going to be able to take you through the rest of today. And I really hope you enjoyed the session and the rest of the insights that come forward.
Great. Thank you, Josh. As ever, comprehensive oversight, delivered at great pace. And remember that you can actually, you will be able to access all of the slides after the presentation. So I hope you've seen there's a lot of data there. Now, I want to introduce you to Beth Bannister from the British Business Bank, who's going to make a presentation. Beth, over to you.
Thank you, Stuart, and thank you, Josh, for that really useful context there. As Stuart mentioned, I'm Beth Bannister and I'm Senior Manager for Wales at the BBB. So thank you for joining us today. It's really good to be here with you, and I hope you find the session really useful. So I'd just like to spend a few minutes giving you a brief overview of the British Business Bank and include a summary of our programmes and activities in Wales. So to start with, who are we? So the British Business Bank is 100% owned by central government, but independently managed. We're an economic development bank, and our core mission is to drive sustainable growth and prosperity across the UK, and to enable the transition to a net zero economy by improving access to finance for smaller businesses. So access to finance is key. As we heard from Josh earlier, and our aim is to make finance markets work more effectively for SME businesses across Wales and across the rest of the UK. You can see there some of our core objectives as a bank. So I'll draw out just a few of them. So first of all, we help to create a more diverse finance market for smaller businesses, provide greater choice and options of providers. We also try to identify and help reduce regional imbalances in access to finance for SMEs across the UK. And we try to encourage and enable SMEs to seek the best finance suited to their needs. And I'll explain some of the programmes and initiatives that we have to help deliver against some of those objectives during this session today. So we support businesses by ensuring they have access to the finance they need at every stage of their life cycle. We support startups, scale-ups, and those more established businesses looking to stay ahead. And we design our programmes based on the insights gleaned from SME finance markets. So that's a key part of my role, is to really help the bank to understand the challenges faced by scaling businesses across Wales in their access to finance journeys. Next slide, please. Thank you. It's important to note we don't tend to invest directly into businesses. Instead, we deploy our funding via a range of around 180 delivery partners, such as banks, leasing companies, and venture capital funds, as you can see on the slide there. So businesses can access capital through our partners who, because they work with us, can lend and invest more, especially to younger and faster growing companies. And operating directly gives us as a bank greater scale, reach and impact to our interventions. Next slide, thank you. So in terms of BBB's supply of finance in Wales to date, so there's some key figures on the slide there, and I'll draw out a few. So in the top right, it's worth noting the impressive milestone recently announced of £40 million of funding delivered via our Startup Loans programme in Wales. So this is a fantastic achievement by our delivery partner in Wales, which is Business in Focus. Whilst not so relevant to this discussion, it would be remiss of me not to mention the impact of our COVID recovery schemes. So C-bills and B-bills have provided facilities totalling over £2 billion to businesses in Wales during the pandemic period. And the Future Fund programme was also a COVID recovery scheme designed to support early stage innovative companies who were unable to access C-bills and B-bills because they were either pre-revenue or pre-profit. So 25 Future Fund applications were approved in Wales, including River Simple and Victrix, who you may well have heard of. Next slide, please. So more relevant to the scale-up businesses are our Regional Angels programme and our Enterprise Capital Fund programme. So our Regional Angels programme is designed to help reduce regional imbalances and access to early stage equity. So accredited fund managers, some of which are listed on the slide there, are encouraged to invest equity outside of the M25. And we're starting to see a real impact in Wales. So the Regional Angels programme partners have invested over 7 million into Welsh businesses to date, including Transcend Packaging, which is a great case study, and we'll hear from Gabriel later on in this session today. They received equity investment from SFC Capital, and we'll hear about their fundraising journey later. We've also seen Newable invest in a space tech company based in Cardiff called SpaceForge. And Deepridge Capital has also recently become a partner under that Regional Angels programme. On the Enterprise Capital Fund side of things, that programme also aims to increase the supply of equity capital to high potential early stage UK companies, and also lower the barriers to entry for fund managers looking to operate in the VC market. So the BBB is the largest domestic backer of VC funds in the UK. And you can see a list of the partners there, including Ada Ventures, Foresight and IQ Capital. These partners and those ones I mentioned on the Regional Angels programme are actively seeking exciting scaling opportunities in Wales. So it's worth checking out their websites to understand a bit more about their investment appetite and criteria. Next slide, please. The final thing to mention on the supply side of the BBB's regional funds. So we have 4 existing regional funds at the moment: the Northern Powerhouse, the Midlands Engine, the Cornwall and Isles of Scilly Fund, and the Northern Ireland Fund. But in the recent spending review announcement in October last year, the Chancellor announced 1.6 billion funding for the next generation of regional funds, including a £130 million fund for Wales. Next slide, please. So this is fantastic news for Welsh businesses, and we are now in the planning and setup phase for these new funds. So our key task over the coming months will be to design an investment strategy for that fund in Wales, based on the evidence needs that will deliver most effectively for businesses across the whole of Wales. This will help us determine the exact funding mix of that fund. So watch this space in terms of that new fund for Wales. Next slide, please. So that was an update on our supply side activities. So why are we here today? So you'll see on the left of that slide some recent findings from the Ipsos Mori research that they undertook on our behalf to better understand the access to finance ecosystem. And it found that in Wales, the demand for finance from startups and businesses scaling in Wales is relatively weak compared to other UK regions, particularly demand for early stage equity. So it may be that equity aversion continues to be an issue. There was also low awareness of finance options amongst SMEs in Wales, particularly alternative sources of finance. So this session today is one small part of the jigsaw in helping to educate, raise awareness of funding options amongst the ecosystem, and encourage more businesses like yours to access the funding that they need. So on this slide as well, you'll see some examples of the work that we're undertaking on the ground in Wales to help stimulate that demand for finance. So we've been working with the ScaleUp Institute to deliver education sessions. This is the second actually in the series, so we delivered one last year to advisors across Wales to help inform them of the funding options available. I also hosted a session during Wales Tech Week in the summer of last year, where we had 4 VCs talking about their approach to funding, finding deal flow and structuring deals. And we were also involved with the Development Bank of Wales with their November Equity Conference to raise awareness of equity finance. Next slide, please. And finally, another key part of what I do on the ground in Wales is to collaborate with key stakeholders and connect businesses in Wales with funding sources. So in about 2 weeks' time, we'll be hosting an event during Wales in London Week, where we'll be showcasing the entrepreneurial ecosystem of Wales and taking 8 scaling businesses who are seeking funding to present to a room of venture capitalists from London. So that's just a snapshot of our activities in Wales to date, both on the demand and the supply side. If you have any questions at all, please do reach out to me directly or follow us on LinkedIn. I'm more than happy to answer any questions that you may. Thank you very much. Diolch yn fawr.
Thank you, Beth. I'm sorry I mangled your beautiful language at the beginning.
Good try, Stuart.
When you have. Now, I'm going to hand over to our next speaker is Max Adam from Innovate UK, and you're very lucky to have Max because she is really a real expert on how innovative scaling businesses can be supported. Max, over to you.
Oh, thanks, Stuart. That's quite an introduction. So, blimey. It is really great to be part of the discussion today and to be invited to give you just a whistle-stop tour of the various ways that Innovate UK is supporting our UK innovators. We are painfully aware of the capital gap for our innovators and something that we're really focused on, but it's about where we fit in this relationship and working alongside British Business Bank. So Innovate UK is part of UKRI, which is made up of the UK's 9 leading academic and industrial funding councils. So they collectively invest north of 7 billion a year, partnering with academia and industry. The thinking here is that we're looking to make the impossible possible. So we're in a different place in the food chain generally. But this provides us with a unique relationship and some connections that we leverage on behalf of the businesses that we work with. Our role is very specific though at Innovate UK as part of UKRI, because we're charged with helping to drive economic growth rather than at the sort of core science end. So we do this, could I have the next slide please? We do this via funding through competitions and grants and latterly loans. And these include some specific grants for single businesses. There's our classic collaborative R&D grants. So we're looking here, some are between the collaborations between businesses themselves and include research organisations, but not always. And then procurement contracts for R&D. And latterly, as I mentioned, our innovation loans offer and investor partnerships. And to make sure that that funding drives a better return for the public purse. So latterly, there has been across Europe and across the globe an understanding from innovation agencies and where they sit within their country infrastructures, that there needs to be more than just funding. It needs to be more than just grants. So we also provide wraparound advisory support tailored to the needs of these R&D and innovation-led companies. Our mission via this wraparound support is to help more of these companies become attractive to investors, so that they're ready for some of the BBB offers. Therefore, they're investment ready, and then they really can go on to grow and scale. So the whistle-stop tour includes our smart grants, of course, which I know lots of people are familiar with. This is an open competition providing funding for businesses in any sector, regardless of the tech area or the industrial focus. There's projects up to 6 to 18 months can apply for between 100 and 500k, and that can be just a single business or a collaborative bid. And then if we're looking for longer projects, we will accept applications between 100,000 and 2 million, but we're looking for these to be much more collaborative, so they must be collaborative. Next slide, please. SBRI is the Small Business Research Initiative, and this is really a pre-commercial procurement mechanism. It's open to all, but really tailored to SMEs. It's 100% funded, so avoids the need for external investment, because we're looking for those amazing ideas to come forward to address public and large corporate challenges. And SMEs are invited to initially put forward ideas responding to that problem. And then there is a further stage gate where we select and filter down and then support those companies to take that idea forward. Next slide, please. Actually, the milestone, the payments are against the milestones that they achieve in those projects. Our innovation loans for us are a really exciting departure, although this has been quite a long pilot that's been going on now for about 3 or 4 years. It's focused on later stage R&D projects, but with a clearly defined route for success. It's for single SMEs, and the loans that are on offer are between 250k to about 1.6 million. Interest rate is below markets, currently at about 7.4%. Clearly looking at that, and up to 100% of eligible project costs are in scope. But critically, it's patient funding with up to 6-7 years available for repayment. And next slide, please. Finally, reference our specific funding schemes. We have our investor partnerships. Now, if you consider some of the schemes and initiatives available that Beth was talking us through, how we align with our investors is really important. And I think the way for the future, this blend of grant funding for innovative R&D projects, so that we're better aligned with VC and angel equity investment. So we're looking really to de-risk their investment. And it's a really successful mechanism, though, bringing in great results so far for follow-on investment too. So for the early stage innovators, a really important opportunity. But it isn't all about the money. If we go to the next slide, Innovate UK recognises it needs to do more, as I was saying at the opening of this slot. It's not just about funding, and Innovate UK Edge is our wraparound support service, offering intensive growth and scaling support. Now, this is really tailored to the specific needs of an R&D or an innovation-led company, and at the risk of stating the blindingly the obvious to you guys, an early stage company has completely different needs to a company about to scale, and we need to consider that. These offers shouldn't be sausage machines. So an innovation specialist will work with a company to consider where they are in that growth life cycle. Essentially, it's around 3 buckets of support, but the focus is very much, as brought out in the innovation strategy, is about that building investment readiness. And that's something that we're working closely with the British Business Bank on. For our clients exhibiting or qualifying as having highest growth, we have our Scale Up programme. It's an enhanced coaching offer provided by a Scale Up board. So again, recognising that there very rarely is someone that can walk on water. So this board provides a matrix of skills and experience that we can dip into on behalf of the company, even though they have one Scale Up director who's working with them to unblock those barriers, challenges, the needs, and work with them to make sure that they're ready to achieve that scaling potential. So, and to whiz through the rest of the family, if we can have the next slide, please. Our sort of 200-300 innovation and growth specialists and getting on for 30 scale-up directors now work really closely with the KTN. And that's the Innovate UK knowledge transfer network now. And it exists really to connect innovators with new partners, working actually at the intersections of the sectors, understanding where there may be new opportunities. We saw through the COVID pandemic, so many of the companies that we'd already supplied grant funding to, pivoting their models, and the KTN is there to make sure that we're exploiting that possibly at an earlier stage and giving them the opportunity to really maximise that. The next slide, please. And it's all about the Catapult Network. I won't dwell on this. You could do a whole session on the Catapult Network. There are 9 located across the UK. It is a world-leading national capability, ranging from cell and gene therapy, connected places, satellite applications, offshore renewable energy, and that facility in Blythe is just second to none. So there's recently been a pilot scheme to provide small grants of around 15, 20k to support companies to access Catapult resources. We find that it's not as many SMEs as we would like, unless they're in an explicit supply chain, are accessing Catapult resources, and we need to do something about that. And that's really starting to bite and have an impact. Next slide, please. Supporting innovation-driven companies to make a global success is obviously a key part of their scaling journey. I think it's true to say, again, stating the blindingly obvious, that they're not likely to be scaling unless they're focused on that international opportunity. So we help our companies find those international partners for strategic collaboration, for investment and support for their R&D and innovation projects. And we do this through two main programs, where we fund, alongside wraparound support, in-country visits and exploration in the relevant market. So this could be a week where we're supporting them to meet potential strategic collaborators, or we have a program called our Global Incubator Program, where we're funding about 3 months for a company to establish themselves in a new market and look at where the opportunities lie for them. It's obviously really important that we're supporting them to build that understanding of the culture, laws and the legislation of the target market. But it's also about insights to make sure that they can really exploit those opportunities. And last but absolutely not least, quite the contrary, Innovate UK is absolutely committed to ensuring that we can innovate for the future, and our ED&I agenda is absolutely writ large across everything we do. We do, however, also have some specific competitions designed for our young innovators and women in innovation, because unless, and this is something very dear to the heart of Indra Mukherjee, our chief exec, unless we can really focus on harnessing the combination of diversity and inclusion and talent and skills, our innovation potential is going to be somewhat compromised. So we really want to drive forward the full potential in the UK. So we welcome ideas and consideration for how we can do more on this agenda. So with that, thank you very much for your time. I hope it's given you some food for thought and told you a little bit about Innovate UK and what we do that perhaps you didn't know before. Thank you.
Thank you, Max. Question for you, actually, though, which I have. The wraparound support provided through Innovate UK Edge, which I know is kind of something you're very close to. Do you have to be on the Innovate UK radar before you can apply to this? I mean, if there must be people who are in on this event today who don't have any relationship with Innovate UK, but might be thinking that would be an interesting thing to talk to. You have to have
yeah,
to
well, no, not at all. Stuart, can I just say that you are absolutely wonderful. Actually, everybody, I should have introduced myself properly, that I'm actually responsible as Deputy Director of Business Growth for Innovate UK Edge. But I didn't want to sort of crowd that in too much. I felt that I ought to be sort of fair-minded about the rest of Innovate UK's offers. Our wraparound support is very much open to all. Pre the COVID pandemic, I think it's fair to say that about 50% of the companies that we were working with were not Innovate UK beneficiaries. Sometimes we're helping them access Innovate UK schemes, but more generally, we're looking to make sure that they're aware of the broader funding and finance landscape. So that's an absolute focus. Through COVID, I think that slipped to about 70-30, and I think we have some numbers for Wales, that some insight coming through from Welsh Government from a recent meeting showed that about 30% of the companies that we're working with in Wales were unknown to Welsh Government and were not receiving any other governmental schemes at the time. So we are very focused on making sure that we're broadening our reach. The levelling agenda, I think, is a constant reminder for us about how we approach that. And it's certainly something that we're looking at. Now, we have a national inquiry gateway. Our website is very comprehensive. So if I could direct people to that, and please do give us a call through those mechanisms.
And I see in the chat that Rod Howells has put in his email address.
Yeah.
Well done, Rod. Thank you.
We have Big Innovation as one of our sort of stars of the consortium who deliver for Innovate UK Edge in Wales.
Great. Thank you, Max. That was great. A really comprehensive oversight there. Now, but we must move on. And again, a reminder: if you have any questions, do put them in the chat. I've got a note of a couple here which have already come through. So, but I'd like to introduce our two scale-up businesses. So, if Gabriel and Damon could reveal themselves. That would be great. Thank you very much, gentlemen. It was interesting, hearing Beth's reference to the Ipsos Mori findings, that there was relatively low awareness of the finance options among businesses in Wales. Demand for equity finance was relatively weak. Well, here we have two businesses who have successfully and eagerly sought out substantial amounts of equity finance over the past few years. We have Gabriel Fish from Transcend Packaging and Damon Chappell from Sonovate. Welcome to you both. Gabriel, if I have a chat with Gabriel first, and then we'll move on to Damon, if that's all right. Gabriel, quickly, the business Transcend. When did it start? What does it do? What's the big market opportunity that you're addressing?
So, thank you, Stuart. Good morning, everyone. So we founded Transcend Packaging 3 years ago. We're based just outside Astrud, and we formed Transcend to target what we saw as a gap in the market, which was taking plastic out of on-the-go food packaging. And really, that's where it started. We started what we're best known for, which is for paper straws, which we began to manufacture at our site in Wales in 2019 for McDonald's. And long story short, we've grown that considerably we now service about 15 of the major what we call quick service restaurants. So McDonald's, KFC, Starbucks. Now we've expanded that to a range of products where, we're able to innovate and create solutions for our enterprise clients to remove plastic from their packaging. And that's really where the gap is in the market. I mean, where we see the opportunity, the larger, bigger players like DS Smith, Smurfit, and others, they're huge companies, and they're quite hard to turn in the direction of this kind of sustainable opportunity, which they're doing, but slowly. But we were able to innovate quite quickly, and we got a lot of help regionally for that too. So all thanks to the Welsh government for supporting us, and Innovate as well, actually, and British Business Bank. And
can you give me some? I mean, you've said there about the growth in the number of customers you've got. Can you any other metrics you can give us about the how the business has grown to date?
So 2019 was our first commercial year, and we did just shy of £3 million that year. Mm-hmm. 2020, so COVID year, which was grim because basically all our clients shut down, but we still did just over £10 million. And then this year, 21, we'll finish up at around about 18, and we're aiming to target around about 30. We've grown our sites now, so we now have a subsidiary in Northern Italy to serve the EU, and we have a new site in Serbia also to target the Eastern European markets, and we're growing globally. And I think we're now we have about 180 employees in Wales, and we're up to 500 total in the group.
Wow, that's a Terrific story. Now talk to us about the financing path that you've been on, because you've had to raise several rounds of finance, and both debt and equity. I wonder if you talk about some of the most significant milestones in the financing of the company to date.
Sure. Financing a light manufacturing company is not easy. And I said this before in a previous panel, there's a reason why not many of them get started. There's an element of quite significant dilution for the founders, because you are essentially buying equipment, you're not a platform. And it has been tough as well. But I'd say we obviously took advantage of the EIS funding route, which we have maxed out. And then we sort of fell between the gap between where EIS finishes, still requiring sort of risk capital to a certain extent, but not being large enough to go after, the big fund, private equity or, sort of equity piece, because we weren't quite at EBITDA positive across the group. So, you kind of fall in a gap there. And we were lucky to find a funder actually in London, and so they saw and shared our vision about how we could grow, and they've been decent support there. And then we've also taken advantage of various programs along the way from the British Business Bank, like the Future Fund, which has been very helpful. And we're more gearing away from equity to more sort of convertible loan notes or some kind of venture debt combination, which sort of incorporates a sort of restructuring of the sort of ABL or ID facilities in conjunction with the working capital venture debt type program. And that's really where we are now. And then looking forward to a larger fundraise, sort of later in this year.
Right. There's another fundraising coming up, will there be? And what's in terms of the from the early stages, what have been the particular challenges of finding the right type of finance at each stage? Did you have to kiss many frogs to before you got the right people in the right prince?
Yeah, yes. We started the company with sort of through friends and family and the founders' own money. As I said earlier, the Welsh government gave us a £500,000 grant, which was great when we first started, so it was very helpful. And Innovative supported us through our technology, research and development, which has also been very helpful. Look, we had to coin the Americans, we had to kiss a lot of frogs, and it has been tough. It really has been tough. And we've got some good local support from some IFAs in Newport and Cardiff who've used their network to bear and bring us some investment. But largely it's come from London.
Mm-hmm. And the investors, because it's a manufacturing business, you're buying capital equipment. It's a long-term play here. What was your understanding when talking to investors about their understanding? Were their timescales the same, in alignment with what Transcends has to be, as given the nature of the business and clearly the scale of the opportunity that you've got there?
Yeah, and I think that's the big, you hit the nail on the head. That's the big sort of divide. EIS money is by its nature a set period of time, and really, the VCT and the EIS want their money out really after their 3-year investment horizon. The next stage is a sort of 5 to 7 year investment, but it's got to come at the right valuation as well that makes sense for the management team and the founders. And that goes back to this sort of mismatch. And it's something actually that America does very well. It sees the future value of companies much better and rewards them earlier for that. We tend to, in the UK, I think, focus much more on near-term requirements in terms of EBITDA operational cash flow positivity, all these kind of things, which create milestones which are quite hard for really fast growing companies to overcome.
Mm-hmm. And that's I'm just because I'm mindful we've got to move. Damon is waiting in the wings here, but I'd just be interested as well, Gabriel, about with the finance that you've had to date, and clearly there's been, as I say, it's been quite a mix. Have any of the finance providers been able to offer you provide additional value to the business over and above the cash?
Really, if I'm honest, it's limited, and the only people really who have are British Business Bank and sort of Innovate and Welsh Assembly through their networking.
Mm-hmm.
Our very first investors, which were the Startup Funding Club, who came in right at the beginning, have also been really solid partners and good introducers, but in a strategic way, less so. But they've supported the company at every single stage, I have to say.
Yeah.
So, and that's another thing. We're looking for the investor right now who can actually bring some actual genuine strategic assistance as well.
So that's part of the hunt for the in this next round is going to be probably quite a substantial amount and strategic advice as well.
It will be.
Well, I mean, I was looking at the World Economic Forum forecast for the growth and sustainable packaging, and it's astonishing. So you're poised for great things. I'm really looking forward to following the Transcend story over the next few years. So thank you, Gabriel. I'm going to move over to Damon. Damon, again, similarly for you, quick, just give us the kind of the brief history of the business, what it does, and what the market opportunity is that you're addressing. And then if you could give us some metrics of the growth of the business to date.
Pleased to meet you all. Thank you for that. So I'll start off. Rich and myself, my co-founder, we work for a very large global recruitment group. We decided to move away from that and really started funding businesses from Sonovate in 2014. So we do this. Sonovate's really classed as the term fintech. So we provide both finance and technology into the contingent or temporary staffing sector. So if someone has a recruitment business, a consultancy, a labour marketplace, anything that puts temporary workers or contractors out to other businesses, we provide a tech wrapper around that and funding that really takes all the hassle out of managing those contractors, managing their appointments, assignments, payments, and really enables those companies to release working capital so they can grow. It's quite a unique solution. We can't find anyone that has a similar solution globally. And we're just about to launch our new lending as a service solution, which means all that functionality can be accessed via an API. It's the only lending as a service solution, and it provides that sort of invoicing and funding at point of need. And in terms of the market opportunity, it's massive. The contingent staffing market is estimated to be about $4 trillion globally, so huge market. And the things that have been happening over the last few years have really only driven more flexibility in work and demand for that temporary and contingent staffing.
And the business itself, in terms of kind of employees and the customer numbers, how's it grown?
Yeah, so coming on, you mentioned sort of the question around some of the metrics. So we're up to about 140 employees, predominantly in Cardiff. We have Cardiff and London offices. We continue to scale out the team. I think as of today, we're looking for about 20, 30 additional heads. Other metrics we look at, really the amount of funding we've provided to the market. We've done about 2.3 billion to date since inception, and last quarter end of last year really was our record quarter, around 240 million in funding deployed. And just to give you an indication of growth, 2020 was about 440 million, 2021 700 million, and next year this year 1.3 billion. So we're growing at about 60% last year and probably about 80-90% this year. And finally, just some final metrics. We've paid about 30 to 35,000 workers through our platform, and we fund about 3,000 businesses. So yeah, exciting times, really.
Amazing. Just on this model, so whose lunch have you been eating then?
Predominantly the incumbents are the large, or in the UK, the big 4 or 5, depending on how you view it, banks. So they provide very, general invoice finance or factoring solutions to these businesses. They're not fit for purpose. They have very difficult terms that manage them, and they take a really bizarre view to risk. So we win the market from the incumbent banks.
Right. So essentially, you've just rethought the factoring invoice discounting market for a growing niche. What has become a growing niche in the market?
Yeah, most definitely, and it's all done really. The way we do that is through our tech platform. You know, anyone who's within the banks will know that they are challenged on delivering, cutting edge technology to the market. So that's where we have a huge advantage. So
as with Gabriel, just sort of quickly tell me that the financing journey that you've been on is one that kind of has some very large numbers in it from a very early stage. But just sort of give us those quick milestones about how it's been. It seems to have been a very straightforward journey for you to raise a lot of money.
I wish it was straightforward. As Gabriel said, I think it's more challenging than it looks on the outside, I think. But we're quite a unique business because we fund off our own balance sheet. So we had to raise a combination of both debt and equity. It was anything but easy, but it looked easy on the outside. So we've really done 4 funding rounds. The one thing we were hugely lucky with was one of our angel investors, a gentleman called Michael Birch. He's a great investor, has been very supportive, has added value, and really he's allowed us to go on the growth curve that we've gone on. He's a very wealthy individual, so that also helps. But yeah, we've done 4 raises, Series A, Series B, and a combination of debt, etc. So I think we've raised probably about 220 million in both debt and equity to date. And similar to Transcend, we're actually looking to close out a fundraising round before the end of this year that will drive further expansion throughout the UK into US and Europe.
You mentioned Michael Birch. I mean, there will be people on this event saying, well, that's great, but how do I get to a millionaire, multi-billionaire in private investor who then is able to provide strategic advice as well? I mean, how did that come about?
I would love to say I can tell you a really easy solution to that, but it was actually through a gentleman we used to work with. He went to school with his brother, so it was literally you should speak to this guy. He invests in fast growing tech businesses, so we were very lucky there and very early on our journey. But I know there are a lot of angel investor network pools and things like that. I know Wales has a few, so I'd recommend tapping into those sorts of networks to get wealthy individuals if you're early in your journey.
And how did you ensure that kind of these early investors haven't asked for too much equity? How do you avoid being too promiscuous too early on?
I think it really depends on who you're speaking to and what their fund or individual investment thesis is. It can be challenging. I think everyone has different views. It was interesting to hear the views about the difference between the UK and US. I would actually agree with that. I think US are far more forward-looking in terms of how they value businesses. They definitely look to the future. As I said, we were lucky. We haven't always been lucky. We have had some challenges with some of our investors, and we cleared out our cap table fairly recently due to some of those challenges. But yeah, I think finding those right investors and ones that see the vision and value is really, really key. And then you'll find you can get to alignment on where the business should be valued today.
Yeah. And what lessons from those first 4 rounds will you be applying to this next round? If there's some wisdom that you've distilled from the experiences over the last few years that you're now going to apply in this next, what was obviously a substantial next round?
I think really finding an investor that fits your profile and you fit theirs. So there are a lot of investors out there. It actually amazed me how many different sorts of investors and how many within each of the different pots, from venture to private equity to the angels. There's so many different investors and so many in each of those pots. I think finding one that really understands your business, you fit in their profile, but also buy into your vision and values. They've got to be aligned, because if you don't get that right, I think you will have challenges as you look to execute your plan.
Yeah, which is kind of easy to say, but how do you actually stress test that they are aligned with your vision before they've committed?
I think as you go through that process, or the fundraising round, you've got to make sure. I think early on in the process, we probably sat there not challenging them as much as they challenged us. And I think as you go through the process and get a bit wiser to it, you have to challenge what their expectations are, what they're wanting to achieve, what their timelines are, what their return hurdles are, all things that you can really understand what they're motivated by. Because if you understand that, you can really align it to yours and ensure then you get mutually beneficial outcomes. You're both aiming for hopefully something that can be aligned. And if that's the case, I think it can work well. So in answer to your question, I'd make sure you're challenging them, you have your questions that you want answered, and you understand their motivations of their investment.
It's a very good lead on to one of the obvious things to say is have a good advisor with you on this, which is a nice lead in for the rest of my panel. So if the rest of the panel, Tim, Duncan, Hannah, Ben, and Mark, can reveal themselves. But first, I just most of all like to thank you, Damon, and Gabriel for your contributions. It's been really interesting stories. Gabriel, I see we've had somebody in the chat from Micro Acres Wales, local microgreens and edible flower producers wanting to change their range of packaging. So they're looking for solutions and want your ideas. So we'll make sure we connect, because as you're clearly the packaging guru for Britain, and Damon, it's a fantastic story with Son of Eight, and very best of luck with the next round. But it's as much as anything else. If you could just the global expansion, what's the sort of the international story for you now?
So we've funded into, to date, I think 40 different countries. So we're in the UK, we've done a soft launch into the US, and I think our planned expansion is into Europe. So we'll plan initially to expand into a few European countries, and then obviously the US is a massive market. I think you have to be a bit careful not to view it as one market. So we will look over the next few years, next 12 to 24 months, to really continue to expand into the US and UK, and European countries.
Good. Wow. And I'm going to, as well, apart from the importance of needing advice when you're raising capital, I'm also going to put it to, and one for general discussion with our panel of advisors here, about the difference in approach to valuations between the US and the UK. And I certainly think I'm going to get Tim and Mark to and Ben to comment on that point, because here we've got two terrific companies, both in very different areas, that showing tremendous growth and gaining, acquiring a lot of finance to be able to assist that growth. And they're both saying we're concerned about the sort of the disparity in valuations. And indeed, somebody else has come in the chat on this as well. So I'm going to move to the panel. I'm going to thank Gabriel and Damon. You can stay or depart as you wish, but thank you very much for your time. And now let's move to Tim and Duncan, Hannah, Ben and Mark. And goodness me, well, we've got a lot to get on with here. Could we kick off actually with Hannah first, the BGF? Just tell us a bit about your BGF's investment activity in Wales, and what your kind of current perspective is on, the BGF from the BGF perspective of the kind of scale ups that are coming through to looking for finance.
Yeah, so in terms of our investment activities, we had our busiest year in Wales last year. So we did 2 sizable new investments, as well as having 1 successful exit, which is great. So BGF is nearly 11 years old now, so it's great to see that the portfolio is starting to mature. So we're starting to get some of those exits coming through, and great that we've had one of those in Wales, and hopefully lots more to come to really give that kind of end-to-end story. So our first investment last year was in Victorian Sliders, so a UPVC sash window manufacturer. So that was a £14 million investment, which is our largest investment in Wales to date. So the kind of key attractions there were the fact that the facility is very well invested to support growth to double turnover of that business. And given they're doing end-to-end manufacturing, they're achieving really strong margins in the market and a leader in what they do in terms of their independent position. Characters.com was the second investment that we did. So the largest independent retailer of character clothing. Really attractive growth and a really interesting story, actually. So husband and wife founding team had grown the business from their kitchen table to over £50 million revenues without raising much funding at all. So the story there is that they raised some equity now to really push the growth on, and they have ambitions to grow it well beyond 100 million revenues, and can really see that within the next sort of 4 to 5 years. And then on the exit side, so DevOps was a 2018 investment that we exited last year. But again, that was actually a US off-market approach. Quite interesting, as you said, talked to earlier about US valuations, came in with a very strategic multiple. Business wasn't looking to exit, but actually it really made sense for founders to at least explore what that might look like. And the US party was able to deliver on the kind of initial valuation that it put in front of the management team, which was a great exit for BGF as well as the founding team there.
There was a question in the chat, which Hannah is probably right for you, is what sort of the range of values are you working with? Is a company looking for a £20 million equity investment out of scope? Possibly Hannah, and I'd also like to get Duncan Gray in on that one, but Hannah first.
Yeah, so BGF's remit has actually evolved. So I've been with the company now for 2.5 years, and even in the 2 years I've been here, it's changed. So originally we were looking to invest kind of 2 to 10 million. And that has now extended where we're doing between kind of 1 and 20 million. So we've done a few 20 million checks. And off the back of that, there's a lot of more opportunity this year. We can see we're proposing, £20 million initial checks, which then will no doubt have kind of follow-on capabilities going forward as well. So yeah, it's definitely evolved. But yeah, 20 million isn't out of the realm of possibility. And I'm sure that might potentially change over time as well in terms of kind of pushing the boundaries on what we can do.
Duncan, can I use that as a way of coming over to you as well? I mean, just there's a precise question about, is a £20 million investment equity investment out of scope? But if you could give us a broader picture of the Development Bank of Wales's investment activity, what have you been investing in and why?
Yep, no, happy to do that, and good morning, everyone. Answering the first question first, into 20 million out of scope by ourselves, yes, we don't write a £20 million check by ourselves, but we would be very happy to do part of that as part of a syndicate of funders. And I think, depending on the opportunity, certainly a lot of the businesses that we see, a syndicate of funders who bring various pots that can back a business over its life scale from startup growth and flotation is useful. So 20 million by ourselves, no, we would share that with other people, but we would share that with a wide range of people. And you know, certainly in our portfolio, there are businesses that have raised those sort of sums, and we participate alongside it. In terms of the year we've had, I mean, Development Bank of Wales is focused on investing in Wales. So far, our financial year runs to the end of March. So far, we've invested 50, 60 million in businesses in Wales, and most of those are scaling in some way or another. My particular team invests in early stage technology businesses, IP-rich businesses doing clever things. So we've invested to date about 8-9 million across a range of businesses. So we've had startups. Glucose Republic, we put a small amount in as a startup as they build their offering that is tailoring your diet to suit your own biology. We had a business called Bivitrix, which Beth mentioned earlier, which actually spun out of another of our portfolio businesses several years ago. So we've taken that, back the founder as she started the business. That floated on AIM during last year. She is one of the youngest CEOs on AIM, which is great, and it's fantastic to have backed her from founder to flotation. And we put money in all the way along. And at the other end, Spaceforge, which Beth almost mentioned, that was Europe's largest seed funding round in space technology so far. Got a lot of national coverage. We backed Spaceforge as a seed, and then we backed it further as part of that funding round as it moves to manufacturing in space. So one of the joys of this business is the sheer variety of businesses and opportunities that comes across the desk. That sort of gives you a taste of what we've been up to.
And you know, you're encouraging obviously more co-investments in. Is that a case that that's you know the proposal has to come to you first? Does they come to, does a scale up come to Development Bank of Wales first, or does it need to access other finance and then they come over to you for looking for co-investment? What's the process?
Either is fine, and we get both. So we get businesses that come to us first, and we can sort of work with them to help shape it. We can suggest who else might be able to back them as part of a syndicate. Equally, we get people who come to us and say, actually, I've got, you know, I'm doing a £20 million round. I've got 19.5 in place. Can you do the last half, please, in order to slot in place? We do both, and we're happy with both. You know, there's no real distinction between them.
And are you seeing, you know, kind of greater, you know, increased activity from more firms coming into, you know, to look at Welsh investment opportunities, or is there a small club, a small cadre of those who, you know, kind of are regularly investing alongside you?
At the half year, we looked at our levels of activity and the co-investment we had alongside it, and our activity levels, the amounts that we'd invested, was pretty similar for the first half of this financial year to the previous financial year. The level of co-investment was about 4 times larger. So the value of the deals that we've been involved with had gone up dramatically. That wasn't our money, that was other co-investors coming in. I mean, I'm not sure if that is a statistical blip or, you know, more hopefully something that continues. I mean, Wales has a lot to offer. There are some great businesses here. And it would be nice if, you know, the wider world discovered that and come in. We have seen it on Spaceforge. You know, we had US VCs coming in and backing that business, and, you know, that's by no means unique. So we have seen, I was on a panel the other week, and one of the questions was, you know, how do we feel about the US firms coming across and starting to invest here? To which my answer was, it's fantastic. You know, they bring a different outlook, they bring money, they bring a different approach and expertise, and all of that goes in the melting pot and helps. Yeah, we get a lot, and hopefully it's a long-term trend rather than a one-off.
Yeah, thanks, Duncan. Maybe Mark, actually, this is you know, kind of you. There's this broader issue about the valuations being applied being greater by US investors than UK investors. And I'd be interested to get your take on that. And then, but also to pick up on something which was from Beth's presentation earlier about the knowledge and take-up of equity finance in a Welsh context, as to whether is there a greater knowledge of the advantage of of using equity finance, or is there still loss of control hold back growth companies, fast-growing companies, from taking equity finance? So they are two big questions for you.
Yeah, thank you, Stuart. I think sort of it was touched on by Dave, and I've seen a couple of questions around that. The reality is that for as long as I can remember, there has been a distinct mismatch between the way in which the US values companies and the way in which the UK investors values companies. And the amount of times you see businesses who try and look to extrapolate themselves across sort of US multiples and the way in which US businesses are being valued over in the States, and try and sort of use that over here in the UK, and inevitably don't necessarily achieve that. I'm not quite sure why. I think the US has always been very much focused around driving growth, delivering, as Damon sort of pointed out, delivering the strategic objectives. It seems to be very much more focused on that top line revenue growth, whereas the UK investor, Duncan, Hannah, correct me if I'm wrong, still look to the fundamentals of cash, profit, and over time, how are this business going to, I suppose, grow into the EBITDA multiples that we think they can deliver? I don't think that's going to change. What you're seeing, and Hannah noted that there, is the US always looks to the UK for potential acquisition opportunities, because they do see there's a valuation discrepancy between the two. They can buy excellent businesses over here in the UK for a valuation that they wouldn't necessarily be afforded to them over in the US. However, the difference being, and it'll, I suppose Damon will sort of prove that over time, is it's not as easy as one might think to access that US capital. It may be there and it may be sitting at different valuations, but the number of businesses that look over to the US to try and find that capital but don't succeed, or find it more of a burden, is plentiful. And I think that the key there is really what sort of was said a bit earlier. You really need to find the investor that marries with what your objectives are. You need to find someone that understands where you want to go to. Don't get hooked on just on a valuation, because if you're looking for just a valuation, you're effectively looking for an exit. If you're looking for a partner to help you grow, you need to ensure that you find that right partner that understands the culture, understands your vision, and can be supportive and help you to deliver that. And as Duncan said, there are many investors over here in the UK who will provide that seed capital and help you grow and evolve into your strategy and your vision. And ultimately, if that's what you want, to help you sort of list on the equity capital markets. So it isn't around sort of US evaluations. It's around finding the investor that is the right investor for you, that understands what you're looking for, that can structure the right type of deal that works for you as a management team, but also for the company as a whole.
I'm now going to take you on. Thank you. I see Ben is nodding in the screen, and Ben, you may want to pick up on that as well before we go to Tim
so the second one was awareness.
Yes.
Yeah, of course.
Loss control and the concern about taking equity finance. Do you think that perception of loss of control is still stops? I mean, and we're talking about companies here at scale-ups in Wales.
I was intrigued to see sort of Beth's comment about the low awareness of options. Loss of control is always one of the key questions that is passed across when businesses that we talk to are starting to consider their options. They've invariably sort of nurtured that business, they've grown it. If they're entrepreneurs, they've sort of founded it, seen it grow, got themselves to a position where the business has got through that tricky period that was mentioned by Gabriel around, you can see the revenue, but you need the finance to sort of help you sort of transcend that gap, that working capital gap that companies often sort of face at that particular juncture. But actually, the reality of life, and Duncan, Hannah, and Ben will sort of hopefully sort of expand on this, is that there are multiple options that are open to you. There are more businesses now that are willing to take minority stakes. There are more companies out there that are now looking to help management teams and address that loss of control issue than probably has ever been the case. And one of the things that sort of Tim and I have spoken about at length is, one of the advantages when a company is right, and if that's an option that they would like to consider, the equity capital markets is always an entity where you still have control. You're the underlying shareholders there do not take majority stakes. They allow the management teams to continue to grow into that particular business. So, there are businesses who will want to take a majority stake, and so that needs to be the right type of investor for sort of the management teams. But actually, I think there's an increasing understanding now certainly from management teams that we have, that actually they have that optionality. That loss of control doesn't have to happen if for them to find the finance that they need in order to deliver against the scale up opportunities that they got.
Thank you. Thank you, Mark. Ben, I wonder if you, with Silicon Valley Bank, I wonder if you can just, for the context for everybody who's in on this, the difference between venture debt and conventional bank debt, and are there particular sectors that you're lending to? And to this point about control, I wonder whether you see, what's your perspective on that?
Yeah, thanks, Stuart. My name's Ben, work for Silicon Valley Bank. So we are a commercial bank, but purely focused on the tech sector and life science sector. I think just quickly on venture debt, I would say, and I did work in a more corporate finance background, traditional high street banks will lend against your cash flow or your balance sheet, whereas venture debt is to come in alongside equity, which sort of backs into a lot of the comments already, right? Raising equity, whether it's venture capital or private equity or the huge ranges of capital out there, is not for everyone. And I'll come on to the ownership piece, but if you do go down that route, you can absolutely complement that equity with some debt, which is a lot less dilutive and help you, hit milestones and grow that valuation ahead of the next equity round. I would just comment on loss of control. I guess to state the obvious, there's the sort of majority control if you go down that route, but typically it's a minority play, and maybe if you're raising a Series A these days, especially an investor coming from the US might want circa 20%. I guess it's really understanding that's going to be a 10-year partnership, right? If it's a new fund that they're investing in you, and they've probably got a 10-year life cycle. So are you ready to have them on your board? And if they're investing in growth and your growth is 60, 70, 80% year on year, they probably want that to go to 100%. So plus it is really a long-term journey. But to absolutely underline what everyone is saying, it's not venture capital or nothing. There's a huge range of capital sources out there. And I think, just going in with your eyes wide open, especially US investors, they're used to companies in the US that from day one, they are trying to build a multi-billion-dollar company. And in the US, your history, in the UK, your history might not be that. So to suddenly try and turn it into a high growth multi-billion company overnight, changes the culture, it changes what's made you special. So.
Yeah. As you say, venture debt comes in alongside equity. Are you coming in at a particular stage of a company's growth? I mean, would you go in alongside a group of a network of angels?
So typically, and there's lots of different variances on debt, but for pure venture debt, no, we would want to come in alongside, or a debt fund looking at this would want to come inside what the market calls institutional capital. So institutional investment. So typically alongside, a fund that has an LPGP structure, has fiduciary responsibilities in where they're investing. So it's typically alongside venture capital.
Right, great, thanks. And one, and this is because I'm going to come to Tim now in a minute, but there's one question that came in through the chat, which I don't want to leave out. And it's perhaps for Hannah, but maybe Ben, you'd also take it. What's the appetite among lenders, investors for the food and drink sector in Wales? There's kind of ambitious. Hannah, maybe you'd like to take that first of all, and Duncan as well.
Yeah, I mean, similar to DevBank, we're a sector agnostic investor, so we definitely have appetite to invest across all sectors. I mean, BGF was set up to support all growing companies, you know, regardless of sector. So I think coming out of the pandemic, I think we definitely have appetite to support there. We haven't done as much locally, but there's definitely appetite, and there's definitely a lot of opportunity. I've actually probably looked at 3 or 4 really great businesses in that sector that we would definitely be keen to do more with. So, you know, where we can kind of take conversations.
Yeah, and I know it's not in your specific area, Duncan, but you know, kind of it's a strong sector in Wales, isn't it? So
Yeah, I was trying to think of a high tech business in the food and drink sector, but probably services too, rather than clever versions of cheese. But no, it's yeah. I mean, look, food and drink is an important part of the Welsh economy. And you know, we like, you know, BGF have an appetite to back that. As ever, it comes down to, you know, business model, product, quality, the management team, and all the rest. It's not an easy sector, but then I'm not sure what sector is easy in this day and age. But no, yeah, the food and drink sector is certainly one that the development bank has backed in the past and has an appetite to do in the future. It's all about the quality of the opportunity.
Great. I'm mindful of Tim. We've coming to you last this time rather than first. So
the graveyard slot.
But you know, kind of hey, we're talking about US UK valuations. As I obviously wants to get your perspective on that. But just give us a current sense of the current trends in you know, IPOs and on AIM and on the main market. Are there particular sectors that are currently in favour, and how's this reflected by activity in you know, kind of in Wales?
Yeah, okay. So if we look quickly back at last year, it was by any measure a bumpy year, as indeed it was for a lot of people. We had 126 IPOs. I was going to remind myself, raising a total of 17 billion at IPO, and then a further 32 billion raised in follow-on, so subsequent raises. However, statistic below, which is that on AIM, so our growth company market, there was 3.2 billion raised at IPO and a further 16.3 billion in terms of follow-ons. And yet, of the 126 companies that floated, roughly half were on AIM. So my takeaway, if you like, on that is that there is significant interest within the broad equity market in terms of growth companies. Picking up on some of the points that fellow panelists have made, and really covering the whole change of ownership, growth capital, UK versus US. I do have a vested interest, admittedly, but I would commend to you the AIM market, not least of all because we have every industry sector and subsector represented, companies all shapes, sizes, stages, ages, and it is very, very much open for business. And so Bivitrix was one of our Welsh companies of last year, I should say, back in August, raised 7.5 million and a bit, and it's now 17.5 million. So in stock market terms, a relatively small company. What are we seeing now? I think it's fair to say that things have, I won't say slowed, but the IPO market is proceeding at a more measured pace, in that we had number 15 this morning, number 16 this afternoon this year. Again, all shapes and sizes. And I think one point I would like to make is that what we've seen over the last 12, 18 months is a marked uptick in terms of interest from currently private companies in actually looking at and understanding the IPO option. And it may be at a very sort of superficial nuts and bolts, how does an IPO work, to, well, actually, I'm on the receiving end of private equity interest. I hadn't really thought of public markets. Can you help me? And the answer is that I can, Mark can, and help guide companies through the sort of what if type conversations. Because I think the disadvantage, perhaps, that UK public markets do have is that there's a lot of people who shy away from it because they don't understand it. And the reality is what we're talking about is sophisticated, high quality institutional and other investment in a different wrapper. And I think the point I'd like to make to try and bring it together about this point, about the 2 points about change of ownership in the US, is that it's all been said by colleagues, but you know, companies need to be very, very, and it's very gratifying.
So, Tim, I'm sorry. I thought I'd lost sound, but we've lost yours. So I think, unless if everybody can everybody hear me? Yes, good. But Tim, so my error there, because I thought it was my fault and yeah, my technology, and it wasn't. It was there, and here we are at 11:26, and I've got to try and round this off with one final question for you all, which is on ESG and ESG credentials and the net zero agenda. They're now central focus in many new investments and for businesses. Are you allocating more weight to ESG considerations in making an investment in a company? Hannah, for you, and then Duncan.
Yeah, it's definitely an important part of our assessment. And I think on 2 points, in the fact that those that are actually doing really well in terms of their ESG credentials are putting them ahead of the competition. So they're winning in what they're doing because they're kind of ahead of the curve. So that impacts valuation. You know, we see strength in those businesses. But actually, you know, you don't need to be at the top of your ESG game for us to be interested, because actually that's something that BGF can add value to in terms of supporting through that ESG journey. So we've just recruited a head of ESG and she's working with the portfolio now to see, well, actually, how can we start to develop some of these initiatives to support the portfolio? Because I think when it comes to exit, that really does help in terms of valuation, but because actually these businesses are setting themselves apart and kind of leading the way.
Duncan, what's your perspective on ESG issues?
I think it's important as part of the package of measures for assessing an investment opportunity. If I'm honest, I think it always has been. I mean, having good, sound governance and being a responsible, ethical business. I mean, for me, that's always been part of what makes a good management team. They may not have the governance that they have sort of as they grow and get bigger, but a willingness to address that for me is part of their fundamental integrity as a management team. So I think it's a useful way to think about it. But we wouldn't have backed a business that was sort of carefree in those areas in the past. It wouldn't have been an attractive investment opportunity because of that.
Is ESG something that you are looking at, Ben, in your area with the venture debt, with debt packages? Is there?
Yeah, I would agree. What the panel said. I think that we went one step further in January and sort of announced by 2027 we would do sort of $5 million in loans and investments specifically to, you know, those companies that can prove sustainability. So the devil will be in the detail, but we've sort of put a big number out there to now go and deliver on. So.
And then Stuart, just from equity capital markets quickly, I'll just echo that. I mean, it's very much a fundamental focus for equity investors on the UK capital markets. All fund managers now look at ESG and the ESG credentials of an investment company as part of their investment considerations. So it is fundamental.
It is absolutely, yeah. It is. It's really important now. And now I'm going to thank you all for Hannah, to Duncan, to Mark, and to now who he is by known as Tim the Silent. Thank you all for contributing to the panel, and we'll go back.
I'm back.
We'll go back to Josh to wrap it up. Josh.
Thanks, Stuart, and thank you very much, everyone. What a fantastic session. Some really, really interesting insights then, both across the businesses and the panel, and obviously our partners and others who have been presenting such a fascinating set of information about the services that are out there in Wales. There will be a poll popping up for each of you very shortly. Do fill that out. It just helps us to tailor these sessions and to determine what we do in the future. And thank you very much, and have an excellent rest of your day.